Hello everyone, welcome to the market opening bell for Monday, July 28th, your 10-minute guide to the stock market. The market is awaiting developments in US trade agreement negotiations and corporate earnings. After 5 consecutive days of gains, the Hong Kong stock market saw a pullback. The Hang Seng Index opened 135 points lower last Friday, maintaining a consolidating trend throughout the day, dipping to a low of 25,355 points in the afternoon and closing at 25,388 points, down 279 points or 1.1%. The Hang Seng China Enterprises Index fell 108 points or 1.2%, closing at 9,150 points. The Hang Seng Tech Index dropped 65 points or 1.1%, closing at 5,678 points. The total turnover in Hong Kong was 281.7 billion Hong Kong dollars, with southbound trading reaching 148.55 billion Hong Kong dollars. For the week, the Hang Seng Index rose 2.3%, the China Enterprises Index gained 1.8%, the Tech Index surged 5.5%, marking 3 consecutive weeks of gains for all three indexes. Southbound fund inflows reached 20.184 billion Hong Kong dollars, the highest since April 22nd. Year to date, a cumulative 820 billion Hong Kong dollars in southbound funds has flowed into Hong Kong, surpassing the full year 2024 inflow of 807.8 billion Hong Kong dollars, setting a new record high. Technically, the Hang Seng Index faces resistance near 26,000 points and may need to consolidate before it can challenge and break through this level. A healthier trend would involve filling the 98-point upward gap from last Wednesday between 25,130 and 25,228 points. Mainland Chinese markets rose and then fell back last Friday. The Shanghai Composite Index peaked at 3,610 points but closed at 3,593 points, down 12 points or 0.3%. The Shenzhen Component Index hit 11,210 points but closed at 11,168 points, down 25 points or 0.2%. Combined turnover in Shanghai and Shenzhen was 1.7873 trillion yuan, down 57.3 billion yuan from the previous day. For the week, the Shanghai Composite rose 1.7%. The Shenzhen Component gained 2.3%, and the Chinex Index climbed 2.8%. The renminbi central parity rate was 7.1419 to 1 US dollar, down 34 pips from the previous day, retreating from Thursday's 8-month high of 7.1385. China's National Bureau of Statistics announced on Sunday that profits of industrial enterprises above a designated size fell 1.8% year-on-year in the first 6 months of the year, compared to a 1.1% decline previously. In June, profits dropped 4.3% year-on-year, an improvement from a 9.1% decline in the prior period. Notably, by the end of June, accounts receivable of these enterprises totaled to 26.9 trillion yuan, up 7.8% year-on-year, with an average collection period of 69.8 days, up 3.9 days. Finished goods inventory was 6.6 trillion yuan, up 3.1% with an inventory turnover period of 20.4 days, up 0.1 days. Chip stocks bucked the trend last Friday. SMIC rose nearly 5% to 52.75 Hong Kong dollars, and Hua Hong Semiconductor surged 9.1% to $42.6. The US released its AI Action Plan, winning the AI Race America's AI Action last Wednesday, tightening semiconductor export controls in 3 ways. 1. Strengthening chip export controls through chip tracking to reduce the risk of chips flowing to high-risk countries. 2. Expanding export controls to subsystems beyond equipment, achieving comprehensive control. And 3. Encouraging allies to intensify export controls for seamless regulation. Amid tightening U.S. controls, domestic substitution in China is expected to accelerate, with mainland advanced process capacity expansion likely to recover in the second half. SMIC's N+2 expansion faced delays in the first half due to photoresist formula adjustments and overseas equipment debugging, but these issues are expected to be resolved in the third quarter. China Tourism Group Duty Free released its first half-year earnings report, still struggling with declines in both revenue and profit. Total operating revenue was 28.151 billion yuan, down 9.96% year-on-year. Operating profit was 3.708 billion yuan, down 18.2%, and the net profit attributable to shareholders was 2.6 billion yuan, down 20.81%. Wuxi AppTec will announce its interim results today. The company previously issued a profit forecast for the first half of 2025. It expects operating revenue of 20.799 billion yuan, up 20.64% year-on-year, with continuing operations revenue up 24.24%. Net profit attributable to shareholders is projected at approximately 8.561 billion yuan, soaring 101.92% year-on-year. US President Trump stated last Friday that the government is considering refunding part of the tariffs to Americans. If approved by Congress, it remains unclear whether refunds would be issued via checks or other tax relief forms. Experts note that the refund idea may face financial challenges, and citizens may prefer using tariffs to reduce the deficit rather than issuing checks. U.S. tariff revenue in June totaled about $27 billion, up 301% from the previous year. U.S. stocks rose last Friday. The S&P 500 gained 25 points or 0.4%, closing at a record high of 6,388 points, up for 5 consecutive days. The Nasdaq rose 50 points or 0.2%, closing at a record 21,108 points. The Dow climbed 208 points or 0.5%, closing at 44,901 points. For the week, the Dow rose 1.3%, the S&P 500 and Nasdaq gained 1.5% and 1% respectively. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, fell 69 points or 0.9%, closing at 7,706 points. Intel reported an expanded Q2 loss of $2.9 billion and plans to cut its workforce by 22% this year, causing its stock to drop 8.5%. Tesla, which fell 8% on Thursday, rebounded 3.5% on Friday, reportedly set to launch a robotaxi pilot in San Francisco as early as this weekend. Reports also indicate Tesla is far behind Musk's goal of producing 5,000 Optimus humanoid robots this year, with only a few hundred produced so far. Sources cite technical issues with Optimus hands have been a focus for Musk since leaving the White House, noting that achieving human-like dexterity and performance is extremely challenging. Nvidia fell 0.1%, Meta dropped 0.3%, Apple closed flat, and Alphabet rose 0.5%. On economic data, U.S. June durable goods orders fell 9.3% month-on-month, less than the expected 10.7% decline. Core durable goods orders rose 0.2% month-on-month, beating the expected 0.1%. Key focuses this week include U.S.-China finance ministers' talks in Stockholm, the Federal Reserve's interest rate meeting, with rates widely expected to remain unchanged. Economic data, including China's official enticing PMI, US ADP and non-farm payrolls, PCE price index, University of Michigan Consumer Confidence Index, etc., and corporate earnings. Our stock pick today is CanSino Biologics, stock code 6185. CanSino Biologics' mission is to develop, produce, and commercialize high-quality, innovative, and affordable vaccines. Its vaccine product pipeline is strategically aimed at targeting large and underserved global markets, which can be summarized into three categories. 1. Global innovative vaccines to address unmet medical needs worldwide. 2. First in China vaccines with higher quality to replace current mainstream vaccines in China. And 3. Preclinical vaccines candidates. The group's 5 products in the commercialization stage include Manthesia, Convidesia Air, and 85 EBOV. Manhysia is the first in China and the first MCV4 to receive new drug marketing approval, not only narrowing the gap between China and developed countries in this field, but also meeting China's demand for high-end vaccines in this area, providing a superior solution for preventing meningococcal disease in infants and young children. Manthesia is China's best bivalent meningococcal vaccine, with phase 3 clinical trials showing better safety in the 3-month-old group and better immunogenicity in the 6 to 23-month-old group compared to other major MCV2 products currently approved in China. Convidesia is a vaccine constructed using genetic engineering methods with a replication defective type 5 adenovirus as the vector, expressing the novel coronavirus S antigen for preventing COVID-19 disease. Convidesia Air is the world's first inhaled COVID vaccine using nebulized recombinant virus as the vector. It not only stimulates humoral and cellular immunity, but also induces mucosal immunity, effectively achieving triple comprehensive protection without the need for intramuscular injection during the process. 85 EBOV uses adenovirus vector technology to induce an immune response against Ebola virus disease. Compared to existing global Ebola virus vaccines and investigational vaccines, 85 EBOV has several key advantages. One, as a lyophilized formulation proven to be stable for 12 months at 2 degrees Celsius to 8 degrees Celsius. It offers better stability. 2. It is an inactivated, non-replicating viral vector vaccine with fewer safety concerns. 3. Is a potential broad-spectrum protective vaccine against Zaire Ebola virus. For the year ended December 31st, 2024, the group achieved revenue of approximately 824 million yuan, a significant increase of 139% compared to 2023, mainly due to the group fully leveraging the advantages of being the only MCV4 product in the Chinese market, achieving substantial sales growth. This product holds a leading position in the market and through precise marketing continues to increase product penetration, driving sustained sales growth. Looking ahead, the group will be committed to continuing the commercialization of Manhysia and Manthesia and will continue to advance the exploration and development of new investigational vaccines through strategic collaborations combining internal R&D with external partners. At the same time, it will actively seek potential global collaborations and acquisitions, continuously expanding industrialization and commercialization coverage in countries and regions such as Southeast Asia, the Middle East, and Latin America, accelerating the enhancement of international market competitiveness. Recommended buy price 42 Hong Kong dollars, target $47, stop loss $39.5. I do not hold the above mentioned stock.